Hi, welcome to the Canaccord Genuity Growth Conference. I'm Kyle Mixon. I cover life science tools and diagnostics for Canaccord. Really pleased to welcome you to this fireside chat with Quanterix. The company offers a really ultra-sensitive protein measurement platform based on digital ELISA. With us from the company, we have Masoud Toloue, CEO, and Vandana Sriram, CFO. Thanks, guys, for joining us today. So Masoud and Vandana, maybe just start on the 2025 guidance update. You expect a meaningful decline in the core business, the Quanterix business. Maybe you can talk a little bit about how you expect the Akoya side to do as well. Just if you could just start there, that'd be great, based on what happened in the second quarter, basically.
Yeah, I can start off, Kyle, and maybe Vandana, you can provide some additional details on the guide. So, for the quarter, we were happy to, despite macro pressure in academic and biopharma funding, we had a solid consumables business, about $100 million pro forma business. If you look at the first half of last year and the first half of this year, it's been pretty resilient. So we're happy with that performance, and we continue to invest into assays and consumables. The accelerator business, vitality of that business, it continues to be strong. We had actually more trials this quarter than we did in the quarter prior in 2024, but smaller projects based on biopharma spending. And diagnostics revenues, which, as you know, we're very focused on, tripled, still a small number, but great green shoots.
And maybe just to give some color on end markets, as we had gone into the second quarter, we had expected academic revenues to be down about 20 to 30%. And that played out largely as we expected, and we were down about 18% on academic. The pharma drop was a little bit deeper, mainly because of accelerator, where we didn't have a repeat of some of the large projects from last year. Recall that last year we grew about 44% in accelerator. So as we look to our guide for the second half, we believe that we've bottomed out a lot of these risks and incorporated all of that into the Simoa guide. And then on the spatial side, the spatial business has actually done pretty well in terms of being fairly resilient on the instruments and consumables side. For consumables, they actually had their largest ever quarter in the second quarter. For them, really, the year-over-year variance is driven by the timing of their CDX program. Last year, they had several milestones that hit in the second half, which we're not expecting to repeat. So that's kind of how we balanced out the guides. But we believe we've pressure tested it in light of the environment. If the environment were to change or if things were to get better, that would certainly be upside to the guide.
Okay. On the accelerator side, maybe start when you had the initial guidance, I think it was over $140 million. How did you think about accelerator back then compared to the 1Q update where you brought down the guide further, but I think it was $120 to $130 million revenue. Now it's even lower. So I feel like that is the key kind of variable that's shifting quite a bit. That was down 60% year over year. It's $4 million in revenue in the quarter. I think we had more than double that. So what's again, I feel like you're kind of communicating that a lot of that accelerator revenue is going to be in the second half of the year. So again, what's going on with that business, given it was such a nice, safe flight kind of thing in the past?
Yeah, as Vandana mentioned, accelerator was excellent. Had an excellent performance last year. 40% year-on-year growth. Lot of phase 2, phase 3 trials. We support almost every single Alzheimer's therapy company in the market. And so I think this year, while that helped us in prior years, we're facing some pressure. The number of trials that we have are greater, and we're getting a lot more new customers, but the project sizes are a lot smaller. And the retrospective samples that we typically burn within a quarter, I think some of that surprised us in terms of size of projects and some shrinking of budget. But we continue to believe that for as long as there are going to be neuro projects and neuro trials, of which there are a lot, the vitality, the number of new customers, the number of projects that we're seeing is still positive. And so can continue to drive growth in the future.
Gotcha. Okay. And then on the biopharma side, just in general, why, just taking a step back, why was that so much, less favorable than you kind of anticipated?
Yeah, a large part of the biopharma basically came into accelerators. So a large part of that, most of that decline is an accelerator. And on the consumable side, we had a little bit of lumpiness. If you recall, last quarter, the first quarter, we actually had record consumables. when you put the two together, consumables are down only 4% on a year-over-year basis, so it kind of balances out. There's a piece of pharma in that consumables number as well. So that was down this quarter, but somewhat balanced on a year-to-date basis.
Okay, and then on the Akoya business, so $30 million in the second half of the year, that's $60 million annualized. They did like $82 million or so last year in total revenue. You know, is there? I mean, that's a pretty big like year-over-year decline. Is that just because of the milestones, like you said, for CDX, or?
Yeah, so they did about $35 million in the first half. So at the current guide, they're at about 65. About $10 million of the drop is just the CDX business. And then the rest of it, you know, call it about $5 million, you know, 7 or 8% is macro related.
That's fine. That sounds good. And then if you think about the Akoya, like kind of like, you know, transitioning to leading this new spatial business going forward, I mean, what's the initial like month or so been like when it's been fully kind of you know, a part of Quanterix? I know maybe talk about like who's leading it and like how like, you know, when you're in the room in these meetings for spatial, what makes you excited? What do you see for the future in terms of like the vision of the acquisition?
Yeah, so Akoya, if you look at the entire spatial market and you say, hey, who was the most translational? There's only one company, it's Akoya, and it's extremely clear. Akoya had done an incredible job of taking markers that were identified in discovery and moving them to pharma, CROs, and eventually, and also the clinic. So we were very excited about that. Quanterix's philosophy has always been, you know, take translational markers, move them into the clinic. That philosophy resonates between the two companies. And our goal here is to create one company, one leadership team, one commercial team, one operating line, where we're able to make and manufacture the single units of assays under one roof. So the goal is to continue build assays, invest into assay development, get consumables running over a 2,400 instrument install base, expand the technology systems between Akoya, what we have in Simoa, and invest in diagnostics.
Gotcha. Okay. And when you think about the spatial market, though, I mean, like, what's your view on trends there? Like, you know, it was thought of as being more attractive like a few years ago. Is it still like, you know, what's it going to be like a growth? How is it going to be a big growth driver for you going forward?
Yeah, for as long as these biomarkers are important, understanding how they're spatially resolved in tissue is going to be critical. You know, right now, Kyle, as we talk to some of the early revenue synergy customers that, you know, day in, day out use Simoa for neurology, we presented some of the spatial technology coming from Akoya, and there's a lot of excitement. You know, we talked to one group that has over 1,000 brain samples, has matching blood pairs. We're able to actually identify and understand, you know, how tau tangles work, how amyloid works, how are they spatially resolved, you know, over a period of time. We think that's going to be an early synergy between the two companies and super exciting. In the oncology space, there's a growing area of biomarker research where people are looking at, you know, these new markers in tissue leaking into blood, where we can identify, measure them in Simoa, and there'll be a lot of, you know, synergy opportunity there, identification of markers that could be important in liquid biopsy. So we think it's still incredibly important. The position in the translational side is key for us because we both want to move things into the clinic, and I think we have a, you know, good perspective there on moving the space forward.
All right, so on the synergies, I think you're targeting $85 million by the end of next year, like annualized run rate of synergies. You know, that's a big number. What gives you confidence that you can kind of get to that point, implement and like, you know, realize those synergies and still grow on the top line for this like larger revenue base?
Yeah, so, you know, we've implemented 75% of them already on a run rate basis. By 2026, we'll have completed all 85 million. So, you know, the goal is growth, right? We're a life science tools company that's moving things into the clinic. We're going to continue to invest in R&D this year. R&D is 30% of our total revenues, and that's our key North Star. You know, customer continuity, customer synergies, and growth focus and investment. So there, we're actually investing more as a percent of the company than Quanterix has for a long time in R&D. So we're excited. But at the end of the day, you know, we have one footprint, one commercial team, one leadership team, single G&A. And this is about efficiency and becoming nimble and organized, and we have a lot of confidence in doing this. I would say we had a running start. We understood the technology really well. We saw it in our customers' hands. We did a lot of work before the acquisition closed.
Okay, and then you have the cash flow break-even target for 2026. Does that assumption, like that assumes the macro stays the same or gets better? Can you just talk about that a bit?
Yeah, we've basically stress tested that scenario, assuming that the macro remains largely the same. So, if you think about it, Akoya on a standalone basis used about 15 to 17 million of cash in the first half. Take out the interest component of that, that's about 25 to 30 million on the Akoya side. We, without any cost actions, would probably have used about 50-ish million of cash. Put those two together, and then when you take out 85 million of synergies, that's what gets you to that cash flow break even. So even under the current revenue construct, we're comfortable that we would get to that cash flow break even number based on the synergies.
Gotcha. Okay, interesting. All right, that sounds good. Now moving to how are you using cash, the R&D, like you were just saying, Masoud. So talk about the Simoa One. The launch is upcoming, and then you also have the kits that are for third-party flow cytometers. How is just again give us an update on that kind of rollout and that launch.
Yeah, we're super excited. We're increasing the sensitivity of the platform by an order of magnitude. We're increasing the complexity of the system, and we're making it really easy to use. And if you sort of step back, Kyle, and you said, hey, in diagnostics, there are two things that are absolutely going to be needed in a future generation of tests, what would those two be? And I would say, I think you would get consensus agreement, better sensitivity for early detection of disease, and you would get higher multiplex, right? Not 50 or 100, more on the order of 5 or 10. And so with Simoa One, we're really providing a platform that will serve as the future biomarker generator for liquid biopsy testing as we move forward, both in neurology but also in oncology. So Simoa One, day one will have an immunology menu and a growing oncology menu that will help elucidate additional markers and help improve sensitivity of what we think will be in immunology and oncology-based liquid biopsy testing.
So Simoa One has some clinical use cases, or is it just for the research on immunology and I guess oncology too?
It will start in immunology and oncology, but we're already working with a handful of important oncology markers that will be using with our collaborators as trying to incorporate protein into different types of genomic tests to improve sensitivity of those existing tests.
Yeah, okay.
So it is a solid generator, solid base point for identification of new markers. And having the tissue knowledge upstream of that, critically important. I mean, we're already finding with some of our collaborations, ubiquitous markers that were in tissue that were never in blood, secreted into blood at ultra low levels. The ability to measure that with our current technology, or even better, Simoa One, is going to be important as we see more multi-omics-based liquid biopsy-based testing.
Okay. But when you think about tangibly how that impact from Simoa One comes flows through to the P&L, maybe in 2026. I mean, how is it more of these proof statements of it proves out that the technology can be used for these biomarkers, or is it going to be a real revenue contributor over time?
It'll be a new platform. It'll be a next-gen platform. We are excited about its contribution on the top line. We plan on launching a platform with reagents flowing through that platform by the end of the year. And then we've also said on our prior call that in an environment that is CapEx constrained, we decided that in 2026 we'd be opening up some of the Simoa reagents to a much larger flow cytometer install base. And we sort of have the walled garden option and the open garden option. And so with the ability to take the reagents and go to 20 times our install base, we're basically enabling a lot of research, a lot of academia, the ability to get ultra sensitivity without having to purchase an instrument.
All right, great. And then Alzheimer's disease diagnostics, it's obviously a big portion of the long-term kind of thesis on Quanterix. So you have LucentAD Complete. That's probably it's a 5-marker test. It's performs pretty well, and that's what your go-to-market. I would think. You want to go to FDA with that. You're expecting reimbursement relatively soon. Maybe a price point of like triple digits, like almost $900. So that all sounds good. What are the next steps though with LucentAD Complete, basically? Just like go step by step and how low risk, high risk these milestones kind of are.
Yeah. So first, clinical utility is super important. I mean, if you look at the last 5 or 10 years, you kind of step back and you say, well, we're at an incredible time where there's now 2 new Alzheimer's therapies on the market, and people want to be tested and want to get tested for the disease. They either have family history or are exhibiting symptoms, and there's actually, for the first time, something that you can do about it. These are what I say first-gen therapies. We expect second and third gen to be coming online. So while this is happening, it's a unique moment in time. Really important that we get solid diagnostics to the market. So LucentAD Complete is a big step ahead of just a single marker test. It provides not only just ability to triage, but you can actually diagnose someone with high level of confidence and be able to potentially in the future do differential diagnosis, look at tau staging, and we have a lot of other plans that we're going to do with the 5-marker test. So through 5 or 6 clinical utility studies, we intend to increase the usability, the value of the test for payers. We have a Medicare recommendation coming up by the end of the year. That's going to be important to get the test reimbursed, and then we're going to be spending a lot of effort commercializing the test and getting it into our partners' hands.
Okay, then on the test, again, 5 markers or so. I mean, are you done kind of adding markers to it, or do you think like the more the merrier when it comes to neurology biomarkers?
Yeah, we are a leader in this space, Kyle. So we thankfully have a incredibly strong R&D group. We have incredibly strong KOLs and pharma partners that we work with on a regular basis that are always coming to us with unique markers and bringing them and trying to understand how those markers can better differentiate disease. And so as we bring those in, we launch them as RUO products. They're always candidates for, can this additional marker provide value as a measure for monitoring? Can it differentiate disease? Can it differentiate frontotemporal from Alzheimer's? And we're just getting started. The 5-marker test, I think, is a sign of evolution of diagnostic tests, and with more markers you can do more and learn more, and it's going to help the patient, physician, and it'll be of interest to payers.
Right, and you just had the update on 205, p-tau 205 and 212. Does that have some clinical utility as well over time?
Yeah, 205 and 212 are incredible progression markers. So we just launched those at our AEIC, available on the Simoa platform. Super excited. They look at neurofibrillary tangles, and so you have to imagine if you put that into our LucentAD test, you'd not only provide a diagnosis for the patient, but if you were positive on p-tau 217 but had low 205, you would be at the very early stages of that disease. And so a good progression marker, and we think that there could be utility for that as we look at differential diagnosis and monitoring.
Okay. And then when you think about the, Akoya is bringing you closer to oncology, I would say. They have a nice, footprint there. Have you seen already, like, your kind of, like a better channel to speak to those kinds of customers, and maybe those applications are going to make more sense for, like, Simoa over time too, given maybe some of the biomarkers that you already have, identified?
Yeah, absolutely, both ways. I was just in Toronto at our AIC meeting and talking to all our customers, all our neuro customers, about the neurobrain panel that Akoya has. Tons of excitement, huge interest in how does the biomarker relate to pathophysiology in the brain. Are there connections? Can we develop even better blood markers if we understand how these are spatially oriented? And so, from that side, good progress. I think that's a very low-hanging fruit. On the other side, can working with more oncologists generate additional markers in blood? I think early days says yes. We're working on a couple, high-value candidates. That markers there have always been in tissue, and we're identifying they leak into blood, and we're turning them into some more products and getting into the hands of some early researchers.
Gotcha. Okay, sounds good. Then you're launching a lot of new assays the past 2 years or so. Big focus of the company. What's the kind of roadmap like going forward? Do you want to launch like X amount each year? And how? I mean, is this like important for the kind of revenue model to work basically?
It's the most critical thing in the revenue model. We looked at Akoya, and when we look thinking about the acquisition, Quanterix's platforms are some of the most high throughput life science tools platforms in the market. If you looked last year, each of the platforms in our accelerator lab would deliver over $1 million or so in consumables per system. So massive utility, high throughput. So in that sort of situation, the goal is develop as much rich and diverse menu as you can. We've been only doing it in neuro and just started to do it in immunology to get our existing over 1,000 instrument install base running and operating with exciting menu. So that's been the focus. With the acquisition of Akoya, we now have a 2,400 instrument install base, a $100 million consumables pro forma group, and we're weekly meeting on exciting menu that we can add on the Akoya systems and also on the Simoa systems. Many of them, as we've been talking about, synergistic between the two platforms.
One challenge that Akoya had historically was the pull through on their systems. Have you identified that is a little bit subpar, and are there ways to kind of expand that, I guess, whether it's through some kind of a synergy effort or like new products?
Yeah, we love box salads, Kyle. I think you've heard me say that before. We are extremely focused on new menu and adding new menu, new markers, and providing it so that it's easy for a customer to use. And just because we're in the translational space, that's what people want. They want everything packaged together. They don't want to make their own salad. They want to buy a box salad. And that's one thing that we do really well. I think we're learning that they have a great R&D team, a lot of really talented individuals on both sides. And our number one focus in the company is increased throughput of those platforms. The capabilities are already there. They don't need an instrument change. It's all about developing great content. And I think we have a plan on that path to achieve it.
Okay. Finally, for on 2026, it feels like investors are not truly appreciating the vision of the merger, maybe even the cash flow target and the synergies. How are you going to surprise people next year in 2026, and basically just prove people wrong?
Yeah, well, we're telling everybody what we'll do, and I think it's sort of like you look into 26, and we will achieve our cash flow break-even number. We'll have a balance sheet that's north of $100 million with a great business, 2,400 instruments, $100 million consumable, high margin, recurring revenue model, with significant investments in diagnostics, with things that are on their way to becoming strong successes in the clinical market. So I think as they say, proof is in the pudding, but we're on our way to achieving it, and we have a high level of confidence with a talented team to get there.
Awesome. Okay. Thanks, Masoud. Thanks, Vandana. Good to have you. Appreciate it.
Thanks, Kyle.
Great. Thanks, Kyle.